Hi, everyone. I'm Fabian. Work within Harrison Street. We are a real estate investment company. We are an investor in life sciences. So I'm going to talk a bit about kind of how we view the sector, why we find it attractive, and a bit from our perspective, what we find interesting in the sector. Maybe just a couple of words on Harrison Street. I keep it high level, but real estate investor, as I said, we only invested in what we call alternative asset classes. So we've never owned the likes of offices, retail, or industrial buildings. So we were set up in 2005 with the idea to invest into what were then very niche sectors. So things like student housing, healthcare, and then later on, life sciences was added and things like data centers. Just to give you an idea, of kind of how big we are. We're about just shy of 300 employees. US is our kind of headquarters, about 200 employees. And then we're about 30, 40 in Europe, and then a few satellite offices around. We've invested in about 1,700 assets in total, which is split between developments. So we have dedicated development funds where we would develop the assets and then typically hold them for 2 or 3 years. So maybe hold them in total for 5 years. And then we also have funds where we acquire the assets and hold them longer than that. Here, just again, the kind of sectors that we're doing. So our biggest sector is student housing globally. Then we have assets, everything to do with healthcare and senior housing. Some more acuity on the healthcare scale and some more residential driven. Then we have the life sciences sector, which for us is really like a confluence of kind of healthcare and education coming together. Build to rent for us is really amenitized residential living. Then self-storage, and then we have data centers as well. That's, I guess, one of the newer trends, which I get Laminar is also quite exposed to. Talking in more detail about life sciences. So I guess going away from the slide a little bit, what is life sciences for us? From an asset perspective, it's principally assets which have office space and laboratory space. You can kind of stretch that definition further, but from our perspective, that's probably the biggest kind of target group and how the assets look like on the ground. The life sciences environment is most interesting where you have very strong universities and the presence of pharma industry, and then that is paired with a venture capital environment, because you have you're looking for universities that are creating interesting research, and that research then to be monetized to create companies. So you find that the strongest life science clusters worldwide are typically around the best universities that have exposure in the life sciences space. So focusing on Europe, the likes of Oxford, Cambridge, and the good London universities are obvious places which have the right ingredients, and hence you call that area the Golden Triangle. So that's the kind of the biggest focal point of life sciences within Europe. This is a bit of a table just on how we rank the different countries in Europe. The UK, both in terms of university presence and in terms of venture capital that is available, are ranked highest. That is why the UK is the most leading life sciences market. Compared to the US, though, it's years behind. I mean, it's easily 5 to 10 years behind. The US has a much larger venture capital base. You're talking about really multiples, and that has also resulted in more real estate investors being present and just the market being more commercial quicker. What I would say, when you turn the clock back before COVID, the life science sector generally was really dominated by either the tenants building their own buildings and owning their own buildings, or universities doing it, or public bodies like, regional development bodies or cities. So you pretty much didn't have private investors that developed that space. So that's really changed in the UK with the onset of COVID, where more venture capital went into the sector and private investors entered that space. So you can almost say, whilst laboratories existed in the UK, a kind of institutional real estate market almost didn't exist pre-COVID. Many stats on that graph. I think I'm just going to summarize a few ones. So, I mean, that this one is to show basically how much vacancy is in each market. So how much was built versus what is the supply and demand. And basically in the US, what you have had in recent years, you had an oversupply boom. So life sciences was a very hot topic. Investors piled in, build a lot of space, and the bottom line is that many markets have way too much laboratories which are not taken up by tenants, which has on a global level provided a bit of a dent on the sector because some investors lost money there, and it's kind of difficult to recover from those positions in places like New York, where half of the buildings are empty effectively. But what we want to show is that in the UK, the Golden Triangle, for example, is at a much lower rate. So you had much less supply. So you have healthy ingredients, basically, for an investor like us to go into those markets and to develop. This is, I think, I've anecdotally talked about the venture capital. So you see a real spike in 21 around COVID, where the whole sector just received so much more funding and attention. And that was a real catalyst for the real estate market as well. That dipped a bit, but it has recently come up again. So we see the overall ingredients for the occupier tenant base to be there, for the life science industry to be interesting. Here, just generally speaking, I think what supports life sciences is global trends like aging of society. Ultimately, there's more money going into medical research. Big pharma companies are still increasing their R&D spend overall. And actually a trend, the big pharma companies are kind of starting to allocate that R&D spend more externally. So they've done a lot in-house in the past, whereas now they're actually spreading it more evenly to new companies as well, kind of, again, giving new startups a chance to grow, which then creates the demand for our buildings. Just a few things on kind of industry trends, what we see in the UK. I've picked up a few examples. So one is, again, going 3-4 years back, the way the buildings were built here was basically on a case-by-case basis. It was entirely dependent on the end user. And often the real estate investor like us would just build the shell, and all the fit out would be done by the tenants. So it would be very tenant specific. As the market has become more professional over time, these tenants, they often have very short kind of decision horizons. They get money from a venture capital fund, have a 12 months kind of look forward cash position, and they want the lab space there and then. So it has become much more typical to build kind of plug and play lab spaces where the lab benches and everything is already in place. You can basically turn up and start with your experiments straight away. So as a real estate investor nowadays in Cambridge and Oxford, typically you build laboratories where everything is already in the building. So we call that fully fitted, which increases your cost as an investor to build it. You get higher rents in return. Makes it slightly more risky because you have to invest more money before you know that you have a tenant in your building. Then I think I talked about the US, of how much is being developed in that space. It has also increased a lot in the UK, generally speaking. So this is just a simple graph. Kind of before 22 and 23, you can kind of say there was no private sector investment. It was all done by the tenants themselves or universities. And that has really increased. So you're looking at 24 was kind of 300,000 square foot. In 25, it's 1.5 million square foot in Cambridge, Oxford, and London. So, which is meaning that there are some buildings which are basically starting to be vacant, and it's a bit of a, you need to see whether all of that supply is being absorbed. And I think my last point on this slide was that, as I said at the beginning, in continental Europe, you have some very interesting clusters as well. So in the Netherlands, Leiden, for example, is a real excellence cluster with universities, pharma companies being there, investors being present. Munich, Paris, similar stories. But you have less venture capital funding compared to the UK overall. So that has resulted, you also have less real estate investment. So those markets are still really at a very early stage in comparison. So you can say the US is fully mature, the UK is maturing, and then continental Europe really is, as we would call, nascent, really in its very early days. Then just generically kind of on the market and outlook, from a real estate investment perspective, as in other sectors, real estate is going through a little bit of a tough patch overall because of repricing. As interest rates went up, basically real estate yields or real estate prices have gone down, and the same has happened in life sciences. So, I won't talk about the detail of these yields, but basically, pricing for assets would have easily gone out by 20, 30%. And when you think about new projects, it makes it very difficult for a real estate investor to make them work. So viability at the moment is very, very challenged within life sciences. So there are still things under construction that were started 2 years ago. Kind of new projects are quite difficult to make work. And that's kind of overlaid a little bit by also investors being more cautious because they've seen the US example of oversupply. I guess kind of trying to bring it together. I mean, it's still a very young sector. It's a sector that only emerged in COVID. It kind of overshot quite quickly and is normalizing now a bit. The ingredients in the UK and the Golden Triangle are definitely really interesting and something to be built upon. And we as an investor, we own about 10, 12 science parks across the UK. It's definitely something which we want to build upon and further invest in the sector. Just need to pick the right projects and the right locations.